focus on Nucleus Software. That stock is higher by close to about 15% after the company delivered a good set of earnings. Avnish Datt, the Global Head of Strategy and Corporate Development at the company, now joins us. Hi Avnish, thanks for joining in. What explains this 17% sequential jump in your revenues? Because historically, the revenue growth of the company was a little more subdued. So this quarter, it shot up to about 17% on a quarter-on-quarter basis. What was the reason, and is this momentum sustainable?
Hi Ekta, good afternoon everybody. Ekta, yes, this is encouraging. I must say some of the long-term bets that we started working on around 18 to 24 months back have started probably coming off. It will be too early to say whether it's sustainable or not. Let's see how it plays out. But I think the transformational initiatives that we started off a while back on, they seem to be now, dripping off some returns.
Hi Avnish, thanks very much for joining in. Even operationally, you all have seen, I think, 60% plus jump in your EBITDA. Margins have now gone to above the 24% odd mark. Is this going to be the norm now? What is it that has changed so much operationally?
Again, we continue to invest. So I would again suggest that let's wait for a few more quarters for the rhythm to be stabilized. As you probably know, we invested heavily in building up leadership team outside of India. We opened up new offices over the last few months. We would continue to build a team and also recruit senior leadership talent outside of India. So what we are doing is we are continuing to plow the surplus back into the business. And let's wait for a few more quarters to see how the trend stays.
Well, despite, the company making so many investments, the cash in the books is still close to about 350 crores. So what's the company's plan with respect to deploying this?
I was waiting for that question. So we continue to be conservative when it comes to inorganic growth. However, the cash in the books allows us to make longer-term bets, to not, worry too much about long-term strategic investments. As you know, we have started opening up in the U.S. market. So we opened up an office and we got a very senior person to look after the U.S. market. We would continue to plow the cash into developing new markets, and let's see then.
Okay. What are the new markets that you could be looking at?
Last year, we opened up Australia, US, and we are also beefing up presence in Europe a little bit. In addition, we are ramping up our go-to-market presence in Japan. We have also moved some of our team and also deploying senior leadership resources in Africa, especially the sub-Saharan African market.
Okay. Right now, what percentage of your revenues is the sales and marketing expense, and how much would you like the sales and marketing expense to go up as a percentage of your revenues, considering the kind of investments you want to make?
Okay, I've got Meenakshi who might help me with an exact answer to that, but I must say, given the mode we are in right now, we are not minding the limits on sales and marketing expenses as much, so I don't have an upper limit really. We are really looking at what is it that is required for us to grow to our potential, and what is it that's required for us to really leverage the new product launches the best in some of the high-yield markets. So all I can say is directionally you will see us continuing to invest in sales and marketing. The current spend, I'm just told, was 13%. So the sales and marketing expenses were 13%.
All right, and that will continue to inch up. You're not considering using the cash to reward your shareholders, perhaps, increase the dividend payout or any other, metric to reward shareholders?
I think the shareholder rewards would really be in the long-term growth of the organization, and we are not making any active plans around using the cash per se, but looking at what is it that we can do to maximize our potential. If we need to use any cash for that purpose, why not? But that's not something that we are planning around.
Okay. One final question then. In FY15, your revenue growth was just about 2%. In FY16, as you step into the new year, do you think revenue growth will still be in single digits, or do you think you can inch it up to double digits as well?
How I wish I could answer we would inch it up to double digits. Let's see how that goes.
All right, Avnish, thanks very much for joining in, and all the best for FY16.